So there are some people that I've seen who are really skilled at buying and selling stuff short term. It is really bloody hard. I hardly know anybody at all of the world's most famous hedge fund managers who use that strategy that really made wealth. There are some. The real wealth is made by spotting something that is got a long-term secular trend ahead of it and investing in that, and then not doing anything but just keep investing in that one theme. So in this case, let's say it's Bitcoin and Ethereum. We've talked about the role they both will play. So in 10 years' time, the probability of these being a magnitude higher in price is huge.
Hey guys, welcome back to Library of Wealth. Today we have macro investor and crypto bull Raoul outlining why the cryptocurrency market could be the last opportunity for investors to generate gains during this period of rising inflation and crashing stocks. Pal takes us through how to navigate Bitcoin and Ethereum during this volatile cycle, his investment thesis, and what the future holds for the crypto market. Raoul has been getting some heat online from the so-called crypto experts, but he takes it in stride and pushes forward. While he acknowledges that investing in the crypto space, like always, has risk, Pal remains confident in his assessment that the crypto market is one of the only places you will make money long term. This is Library of Wealth. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Most millennials are now in their early 30s, and in their early 30s, they look at the world and they look at their income, and you can't buy a house. And the stock market is expensive. It's at all-time record valuations, and the bond market. All of the investment world is incredibly expensive. And so you're stuck where, okay, you start saving a few $100s a month. The problem is there's no interest rates on your money, so it doesn't grow. But meanwhile, the cost of everything goes up more. So you're actually getting poorer, so you have to save more and more money, and it becomes almost impossible. So what is the factors playing out here? Why is this becoming so difficult? Well, we used to have higher interest rates, but because of this huge baby boom population who are retiring, plus the amount of debt in the system, interest rates have fallen for 3-4 decades now to now zero. So nobody gets any interest on their money, but we still have inflation. So the normal cost of goods normally has been running at like 2% a year. Doesn't sound a lot, but over time, over a 10-year period, that ends up being 30% or so of your money, that your purchasing power that you've lost. So unless your income goes up or you save more and more and more every year, you're kind of behind the game.
The Federal Reserve uses money printing to stimulate the economy, but that growth is short-lived as the inflation rate gets higher and higher. You won't see the effects right away, but it's a time of investor panic when they see red across the board in the market.
But then there's a bigger thing. So right now we're seeing high inflation. We're seeing inflation at 8%. So then you're really behind the game unless your salary goes up enough and you can start saving more. So everyone's behind the game. But then there's another crazy thing happened when interest rates hit zero and we got to 2008, that famous financial crisis. The central banks started using something like the Federal Reserve, being the central bank of the United States, started using a different way of trying to stimulate economic growth and save the banking system. And that was called quantitative easing, which is a fancy word to say we're going to print more money. And when you print more money, you devalue the money. So to put it in layman's terms, if you are really thirsty and somebody says, well, I've got a bottle of water, I'll sell it to you for $5, you'll pay $5. If somebody gives you 1 million bottles, it's worth nothing to you. In fact, you pay somebody to get rid of it because it's cluttered up your entire house. So things that are, if there's too much of something, it becomes valueless or less valuable. So 1 Mona Lisa is valuable, 1 million Mona Lisas, not valuable. And that's what's going on with money. They're debasing it, which means that they are lowering the value. Now, you don't see it very easily. All you see is that these asset prices keep going up. Every time they do this quantitative easing magic, the price of the stock market goes up, and the price of housing goes up, and the price of crypto goes up. And everyone's like, well, I can buy less of it now suddenly, but my income hasn't gone up. That's debasement. So you're now poorer, and you didn't realize how it happened, and you don't understand it. And it makes people angry because they don't understand why they can't get ahead. wages over the last 50, 60 years haven't gone up. And the reason being is the millennials are in the workforce with their parents. So you've got the two biggest cohorts of people ever competing for jobs. And then there's globalization, i.e. Chinese workers and Indian workers and Mexican workers. And then you've got technology. You've got to beat the robots and AI who are taking everybody's jobs. So wages don't go up very much, but the cost of all these assets keeps going up because people are devaluing the dollar. So that's why it's so hard to get ahead. And that forced me to look at, okay, how do we get around this? What can we do that's more sensible than what we were told? Because our parents were all told, save money, but they had 7%, 8% interest rates. So it adds up pretty quick. But this doesn't work. So what I did is I started looking at all of these assets and dividing them by the size of the central bank balance sheet. So how many, basically how much the Fed have printed. And what you found is the stock market didn't really do much. The S&P 500. The property market didn't do much. So they were just basically keeping in line with what was going on. So they protected your money, but you didn't make money. You didn't get richer.
Because wages haven't gone up in the last 50 to 60 years, but inflation and prices have, millennials can't get ahead. Powell explains how the devaluation of currency has not only led to globalization, but the Fed's protection of money didn't lead to an increase in wealth. Here he talks about his investment outlook and the time to invest in the crypto market.
But when you looked at two things, they were the only things that made the real difference. One was technology stocks, because we live in this technological age of incredible change. And so those things tend to do well. But the thing that beat them all was crypto. Crypto did extraordinarily well because what you've got is some forces at play. One is there's digital scarcity, so you can't print more of it. So if something is being printed more of, it goes up in value versus a thing being printed. So that's great. But the blockchain technology was like a call option on the future financial system and the future of the internet. So you've got something that looks like a tech stock with adoption and has the safety of, let's say, gold. So that became like the holy grail. And then, the speed of adoption, everything else is what's driven the price rises. So that's why crypto's been such a good savings vehicle. I made a video on this several years ago that's probably had 3 or 4 million views now on YouTube about the retirement crisis. And back then, I probably did this in 2015 or so. I said, if you are a 30-year-old, your answer is to start saving in crypto because that is the big opportunity because the upside is so much larger. So yeah, that's the only way I see it that you can get ahead. Or start your own business is the other way. So the internet was previously the fastest adoption of any technology. This is growing at twice the speed. So currently there's 300 million users of crypto worldwide. It's growing at 185% a year. So that means by next year, you're at 700 million people.
Whoa.
And then the year after that, you're at 1.5 billion people. So what's amazing about it is, yes, it's amazing the technology and Web3 and all of the power it gives back to the individuals and all of the great stuff. But the big difference here is by owning the tokens, you're being part of the network as well. So you can not only get the benefits of this new system in a social sense, but you get it in an economic sense too, because it goes up in value. It's like finding Facebook back in 2010 and being given shares in Facebook that everybody who used Facebook had shares. It would have made everybody rich.
Mm-hmm.
This is what this is doing, because you get the utility of all of this and you get the financial benefits.
One of the optimistic points Raoul makes is that over time, you should be happy to see the sell-offs, because when the trend goes back up, you can make double or triple your money. It's volatile and gives you an opportunity to buy cheaper and get a higher return on your investment.
So what you want to do then is it changes your mindset. You say, well, every time it sells off, like it did, over the last year, it's been down 50%. Well, I should be buying it because my expected future return has just gone up. Because let's say something's at 100 and you expect it to go to 500. So that goes up 5 times. If it's fallen to 50 and it's going to go to 500. It's now going to go up 10 times. You make double the amount of money. So you should be really happy to see these sell-offs over time, because it means you can buy more cheap stuff and gives you a higher return for the future. And that's why dollar cost averaging takes the stress of trading away and just says, every month or every week or every quarter, I'm going to stick some money in, and I don't care where the price is, and I might rush my buys if I think it's really fallen, or add a bit extra because it's a good opportunity. But you just look at the long-term trend, and the way to look at these things, because if you look at the long-term trend on any normal chart, you go to TradingView or something, they all look like this. So it's not easy to look at. Use what's called a logarithmic trend, where it changes the scale, and then you can see these beautiful long trends emerge. And Bitcoin fit perfectly. Amazon was the same. Google was the same. They're all the same. You just find this, and then when it starts getting down to the bottom of that trend, it's a really interesting place, unless something has fundamentally changed and that particular token is not as robust, or it may be failing because of the community or the utility that it's offering. But with ETH and Bitcoin, it's pretty straightforward. So Bitcoin is still the big daddy of the space, and it's the OG. It was the first one to launch. Now, Bitcoin has some very unique attributes, which is that it is, got this very restricted, understandable, knowable, non-changeable supply. So you know how many Bitcoin are going to come onto the market every year, and when that stops, when we get to 21 million. It's also, the way it's constructed is a proof of work mechanism, which means that there's lots of computers around the world, Bitcoin miners they're called, who have to solve this complicated algorithm, and it's expensive, you need huge computing power. And that network of miners basically protects the network. So there's not a single person that validates everything. It's all of these people. So Bitcoin is incredibly secure and robust. So for a system of money, meaning for savings or collateral, the things you borrow and lend against, it's amazing because it's so understandable, knowable, definable.
It's always refreshing to hear Raoul's take on the crypto market. His success and optimism give him a unique perspective to a lot of crypto investors. But what do you think about Raoul's interview? Leave a comment down below. This is Library of Wealth. We'll see you in the next video.